Does it mean that people are taking advantage of the small downtick, if you like, in prices? Because I haven't really seen a huge downtick in most pricing.
Yeah, I think many buyers that are expecting a discount, at least early on, are going to be disappointed. I think the prevailing trend in housing is that many markets were literally shut down by government mandate at the state level and could not function when you don't have real estate, the ability to look at show property or fear out of for personal safety. You don't have a real functioning market. So essentially what we're seeing across a good chunk of the US is this pent up demand and pent up supply that has built up over the last 3.5 months. And we're essentially looking at a spring market that is being relocated over an existing summer market. The summer is probably going to be pretty busy. And in comparison to last year, it's going to show an uptick. But that's not a boom. That's simply just moving the spring into the summer is effectively what we're seeing.
What about the locus or loci, though, Jonathan? Is the locus moving? Are people still interested in the same geographies, the same areas that they were always interested in?
So there's absolutely a rethinking of, there's been a lot of talk about the urban to suburban transition. At least in the interim, I think that's a bit overhyped, but it's clearly there that consumers are concerned about safety, and the high density markets are actually not that much you're not that much in danger relative to the suburban markets. It's really about overcrowding and the ability to be mobile than it is about density itself.
What are the median and average prices per square foot gone to? I mean, given that you only have sort of data per quarter, and it's difficult to know if this is just a 1 quarter phenomenon or if this is going to be an extended price change.
Well, if you look at a market like New York, you're talking about $1,640 some odd dollars a foot. There was price declines on a year-over-year basis. The market has been sliding for a little over 2 years, but the decline in prices that we're seeing were really impacted by a year ago when we had a tremendous number of closings of $50 million plus properties that skewed the numbers. Actually, what you're seeing right now in the second quarter report that I'm referring to out of Manhattan is there's really not much evidence of price discounting yet. But now that the brokerage community is able to do in-house showings, they're able to physically show the interior properties as of this past June 22nd. The next quarter, I think, is where we see real price discovery and, this enhanced ability for consumers to see property.
So days on market and so on, they're slightly misleading these days, right? Because metrics like that were stopped for a while during the coronavirus pandemic. So I'm more interested to know what you think the discount will be for the foreseeable future, given that we won't have a vaccine, until next year, most likely, that's workable and distributable across the country. Will there be, for somebody who's been looking at real estate for decades now, will there be much more of a discount in coming months?
So at least initial signs, there may be some discounting, but not a lot. All we have right now in markets that have been completely shut down in the second quarter and are just opening up now is anecdotal. And the anecdotal evidence essentially shows that for every transaction that there is a discount, there's a transaction that there isn't. To just be clear, about 90% of the transactions that closed in the second quarter had some linkage to the first quarter where a consumer had physically gone inside a property. What we've learned from this situation is that consumers generally aren't buying homes with virtual. Think of virtual like Zoom as a supplement to the home buying experience as opposed to the replacement of actually going inside. So
I understand about technology and about different ways of viewing and so on, Jonathan, but what about just the fundamental facts of we're in dire recession right now, and there's all sorts of presuppositions about whether we'll see a recovery and what shape it'll be and so
Right.
on. But I mean, so many people are just not getting paid. They're furloughed, out of a job, and they haven't been spending on things they need to be spending on, which will take first priority, presumably. So surely the real estate market has a difficult time ahead of it.
Absolutely. I'm not suggesting that it hasn't, but really what we're seeing is we're seeing this release of pent up demand from the spring that's beginning to happen in many markets over the last month. Once that pent up demand and pent up supply, because a lot of inventory didn't come on the market, once that is satiated, you're left with what the actual market is. And I would suspect that the actual market condition is going to be weaker than when we entered, and that's in the context of pricing and sales activity. Right now, it's being distorted heavily by the pent up for those that can buy.
What about formerly, luxury areas? I mean, obviously still luxury areas, but say the Hamptons, for example, Jonathan, even places like Miami, are we still seeing the luxury entry point the same as it was?
Well, we're actually seeing markets like the Hamptons, which is a well-known second home market of New York City, has seen activity levels that are far higher than the same period a year ago. And I think that's a combination of a release of pent-up demand combined with sort of the urban to suburban or urban to second home flight. I think what you have to remember when you're looking at how this market plays out is I think the urban to suburban narrative is too simplistic. I think you're going to see also a transition to second home markets, because I look at this technology with Zoom and et cetera has essentially lengthened the tether between traditional understandings of where you work and where you live and their relationship to each other. We could actually see fewer commutes, but longer commuting times as this plays out. But that all is determined by when and if there is a vaccine down the road.
Yeah, I mean, the problem is that the coronavirus hotspots are changing, right? So where Florida wasn't a problem for a long time, it now is. The same with Texas and, obviously the cities in Texas, Jonathan. So are you anticipating a market where we see a lot of activity and then absolutely no activity for months to come?
Well, I think that's another layer of uncertainty on top of the market, and why we don't expect a full recovery in activity as we get to the other side of this crisis. Right now, consumers are, looking at their markets, and if they don't feel safe, or maybe they do now, but maybe they don't do later, they pause, they wait, and that's, very challenging to housing markets in general.